Hey, what's going on, guys? Welcome back to my channel. This is Blood Phantom 81. So I'm making a quick video just to sort of get my mind off things and wanted to give a quick update. So the last time I made a video was maybe about 6 weeks ago. So ever since around that time, my account's been doing pretty well. Actually, I'm sure your guys' accounts have been also doing pretty well. Um, and I also wanted to give a status of, am I changing my strategy? Am I still bullish? Am I bearish now? So we're going to go over all that and more. The first thing I want to talk about is my account performance because it is pretty interesting. So yeah, over the past month, I am up about 50K, which is close to 48% in terms of value. So pretty much diversifying between tech and REITs basically. REITs have been picking up, which is nice. But yeah, so the cool thing about this is, my goal has been $200,000 for 2020. Not only am I not putting in money right now, but I'm actually withdrawing money. Yet it's still growing pretty quickly. So that's just that goes to show how strong this market rally has been. Like I said, I'm sure you guys' accounts have also been doing well if you guys are actually in stocks right now. But yeah, so I think that puts me at about 27% away from all-time highs. And that honestly doesn't sound like that much, which is kind of funny to say, but honestly it doesn't. So yeah, overall happy with the account performance. So let's go ahead and take a look at the major indices. So as of right now, I actually started taking profits today. So I think I'm not sure like what percentage I took off. Maybe it was close to like 30% or more. But I basically have enough skin in the game where if the market continues to rally from here, then I'm set. But to be honest, I'd actually prefer a market correction. Not a deep one, obviously, but I do think a nice pullback would present another buying opportunity, another chance to reload and take on more leverage. But everything I'm looking at right now screams bullish in the long term, at least. As I mentioned, I am taking some profits now, but that's just like a short term thing. So yeah, let's go ahead and take a look at the Nasdaq actually, because the Nasdaq is probably the life of the party, so to speak. So we're looking at the Qs on a daily time frame, and we might as well be at all-time highs. It's actually pretty crazy that this shape was the way that it was. But as you guys can see, we are butting up our heads against this overhead resistance, which probably isn't a big deal in the grand scheme of things. But to me, if this bottom trend line were to break, I would expect to see at least a pretty sizable pullback. It doesn't have to be like a deep one, but certainly something more than 3%, in my opinion. But that's just when the market decides to pull back. Because the momentum is on the market side, it's possible that it still, takes a few percentage before it actually does pull back. Let's go ahead and take a look at the S&P 500, and then we'll talk about my strategy. So this is the S&P 500, and this is exactly what made me comfortable with taking some profits now. Just the fact that we started printing some FOMO candles. So a FOMO candle to me is sort of like a period in which people really want to get in the market. And so that's basically extended momentum after a large rally. I mean, this is a pretty large rally. It's something like 40%. Still, that doesn't mean we have to pull back right here. We could still keep going. It's just that to me, as soon as we hit the 0.786 retracement, which is this area right here, see if I can stop it. Yeah, so the 0.786 retracement, which is right here, anything between here and let's say this gap that we left, I think this range would be my take profit zone. Again, I'm not 100% in cash. It's just I'm just getting a little bit lighter. That's it. Just because I'm pretty satisfied with the move so far. One more comparison I want to show. So this right here, this rally looks so similar to 2019, where we also V-bottomed. So let's go ahead and take a look at 2019, and maybe we can look at some similarities. So 2019, very sharp decline, strong V recovery. strong pullback afterwards, then a strong rally, starts using the 50-day moving average as support. Once it starts, scooping up, it starts acting as support right here, and then sharp rally, sort of hits the 200-day moving average, pulls back a little bit, and then not too much resistance on the second time. We do get over it a little bit, but then we do roll over and then use it as support. So where we are right now in 2020 is somewhere like around here. If we were gonna, do a mirror of the two time frames, I'm not saying that's exactly what has to happen. I'm just saying it's pretty remarkable how similar these two bottoms have been. So once again, sharp drop, V bounce, and then strong pullback, strong rally, starts using the 50-day moving average as support, and then starts to rally afterwards, gets rejected at the 200-day, and then doesn't have any resistance at the second time around, and then just rallies strongly after that. So it is honestly pretty remarkable how similar these two rallies have been. And similar to this rally, I would also expect some sort of resistance sort of at or near all-time highs, or anywhere in between, to be honest. So we're actually in my take profit zone, like I said. Right here in April of 2019, we actually made a brief higher high in the S&P 500, but the fact that the Nasdaq is so extended this time around makes me question how much more the market can go up if the Nasdaq chooses to not participate. So overall, with market breadth, I would say that it's nice to see some of these lagging indices or lagging sectors like financials and industrials. It's nice to see those start to pick up, but I'm not sure how much further they can push the rally once tech sort of starts to slow down a little bit. And it's possible that we need a breather in tech, so that's basically why I'm saying that. Let's go ahead and take a look at the Nasdaq, so then we could talk about my strategy. So the Nasdaq has actually been remarkably simple to trade, and that's why I haven't really sold too much up until now. Actually, is that I'm only following this moving average, which is the 200 period moving average on a 30-minute time frame. When this moving average is sloping downwards, it becomes red, and that's usually a time you don't want to be in the market, or at least you want to be more cautious. But once the price action gets above this moving average, and it uses it as support, and then obviously the trend changes after that, then that would be a time to consider adding more risk. So we're still sloping upwards, we're still green, technically we're still in an uptrend. It's possible I may have jumped the gun a little bit, but I'm fine with taking profits up here. Even if we do come over here and sort of retest this area, it's possible that I add a little more. We'll see. But I do think that when we do break below this, I don't think it's going to be one of those one and dones where we just break for 2% and then come back and recapture it. I think it might be a little bit more extended, maybe something like a 4 or 5%. And 4 or 5% in the context of tech stocks is actually a pretty big deal. It's why my account has grown so quickly. So if there is a 4, 5, 6% drawdown, then I definitely want to be on the right side of it. So if we do break below this moving average, I'm probably selling everything and then starting to scale in from there. Last thing I want to do before I wrap up here. So there's been a lot of talks about the market not really representing reality or being detached from reality. I think that's always been the case. It's just people are catching on now and it's actually more obvious. But I do think that when this time period is over, that people are going to go back to assuming that there's a huge connect between the market and reality. So what I'm trying to say is I think people are going to go back to their old ways anyway and not really learn too much from this. I think, and it makes sense, like everything that CNBC and all the media websites and just stock market media, everything that they're telling us is that there's always a direct correlation between the economy and the market. So it's really easy to believe that. And then obviously you have movies like The Big Short. The Big Short's awesome, but I think it's funny that a lot of people are trying to be the hero and try to be the next Michael Burry. But yeah, so the size of this drop. So I'm looking at the Dow Jones right here. The size of this drop was so massive that if we look at the momentum, like a momentum based indicator like MACD, MACD was more oversold here in this recent correction than it was in the '09 recession. So that just goes to show how violent this correction was. And like, I don't need to tell you guys that. I'm sure you guys were aware of that. But, you know, when you have a violent correction, it's possible that you have a violent recovery, or at least a violent move in the opposite direction. So, you know, I think at some point the market is sort of going to have some kind of equilibrium where we don't have 40% months every other month. But, you know, until then, I think there might still be some volatility. You know, obviously, the Dow Jones is hitting its head up against the 50-week moving average resistance. So hopefully, it does pull back a little bit here, so we can start to add more. But everything I'm seeing right now, you know, despite where we are with the Dow Jones, everything I'm seeing right now seems really constructive and really good. Like, let's go ahead and look at the S&P 500 one last time. So this is the S&P 500 on a weekly time frame. I mentioned in my last video that this is actually the last check mark that I was looking at before I would consider getting extra leveraged, and that remains true. So we have recaptured this area. It wasn't extremely easy. I mean, we hit our heads up against this 50-week for about 3 weeks until finally breaking above it. So, you know, pullbacks above the 50-week are a lot more generous than pullbacks below the 50-week. So, you know, volatility is usually more on our side above the 50-week. So this is where I want to take on more risk. So at least in my portfolio, I'm more on a risk on type of environment. So yeah, that's where I'll wrap it up. Hope you guys are doing well. Let me know what you guys think. How are your accounts doing? I hope that your accounts are doing well. You know, it's a crazy time that we're living in, but I hope it's a learning opportunity for everybody involved. So thank you guys for watching, and I'll see you guys in the next video.